Welcome to this month's Market Update. I'm here today, as always, with Alexandra Veroude, Senior Consultant with Frontier Advisors, Capital Markets and Asset Allocation Team. Hi there, Alexandra.
Hi, Wayne.
Well, a pretty good month overall, August, for global equities. Why don't we start today's discussion with a quick trip around the world, if you could take us through some of those various markets.
Sure. So we saw US equities post positive returns despite a late month dip. We saw confidence around the US economy provide some support to overall returns. Meanwhile, the performance of mega cap technology stocks diverged largely to a mix of country-specific developments. In Europe, we saw European shares eke out a small gain for the month, held back by persistently sluggish industrial activity and ongoing trade negotiations. The UK market advanced moderately, balancing improved economic data against uncertainty over the future of Bank of England policy. In Japan, Japanese equities delivered robust performance, buoyed by generally positive corporate earnings season. And then for emerging markets, they delivered moderate gains during the month, with general positive sentiment supported by stabilizing capital flows. Chinese equities outperformed, rising on the back of positive sentiment, with local investors leading the charge.
So a good month around the globe for equities. What about here in Australia? How did our markets hold up?
So we saw Australian equities register solid performance, underpinned by a sharp rebound in the resources sector, which benefited from a rise in key commodity prices. Resource sector gains, however, are in contrast with mild performance from the rest of the market. Commonwealth Bank, the largest stock in the index, underperformed. We saw CBA report their full year earnings during the month, and they were largely as expected. But after strong returns over the previous 12 months, it appears that there is now some buyer fatigue and the stock price fell.
But not all great news. Some mixed outcomes for bond markets, right?
That's correct. We saw bond markets, we saw some mixed movements in August, with the aggregate bond indices producing moderate positive returns for the month. US 10-year Treasury yields drifted lower following comments alluding to the future direction of policy from the Federal Reserve at its Jackson Hole meeting. Markets read this as signaling that the Fed will lower its rates in the near term, and data to date has reinforced these moves. European bond yields edged slightly higher, reflecting concerns that inflationary pressures have not yet fully abated, and on political instability in France that's reared its head toward the end of the month. And this was also the case in Japan, and Japanese bond yields moved higher. In Australia, yields were broadly flat, reflecting some cautious tone from the Reserve Bank of Australia.
So turning to currency then, how about the Australian dollar? How did it move during the month of August?
Yeah, so we saw currency markets being buffeted by shifting rate expectations and evolving risk sentiment. The US dollar saw some renewed strengthening in August, while the euro and the pound fell. The yen continued its trend of mild depreciation, but the Australian dollar weakened against the US dollar, but appreciated against other major currencies, riding the commodity's strength.
Okay, and so moving our gaze now toward real assets, listed property and infrastructure in particular had a positive month. What was driving those returns?
Yeah, so listed property and infrastructure, as you mentioned, but posted positive returns for the month, and they're benefiting from a less negative perception around the economic outlook and on expectations of future interest rate cuts, pushing down bond yields in the US. For Australia, listed property and infrastructure posted particularly strong performance, benefiting from demand from investors with an appetite for income yielding assets in an uncertain environment.
So a broadly solid month in August. It's been a good start to the financial year for investors. Thanks for taking us through all of that material, Alexandra. And thanks to you for watching this month's Market Update.